Hello, promoted Marcus. This is Ahura with FOMC meeting review and market reaction. As we know, yes, last night Federal Reserve had a meeting and they cut the rates by 25 basis point as it was widely expected. Uh, as it was widely expected, yes, this is what happened, but the market didn't react to this decision because it was already expected. What was very important, it was the statement that we had in press conference that right after the meeting we had. On the statement, Federal Reserve mentioned about the risk of in labor market and the inflation. They mentioned that the risk is the balance right now, and they have the same risks around both of these mandates that the Federal Reserve has actually. And at the same time, in the press conference right after the meeting, Federal Reserve Chair Powell mentioned too much about the power of U.S. economy, about the labor market that despite or unlike that it's more than 6 months above 4%, it's still fine and it's good and it didn't go so far above 4.1% and it's around that 4% for around 6 months. So, and initial jobless claims is fine. So generally the labor market is fine. This is what the Federal Reserve expecting and seeing in a labor market, the strong labor market in the USA, while the economy with 2.8% increase in quarter second and the third quarter, this means that the economy is fine. Generally, the markets with the earnings that they had, they mentioned that generally they seems that the U.S. market, U.S. economy is improving well. But about the questions about what if in the press conference about the questions that whether the people are also feeling this strength in the economy or not, the Federal Reserve mentioned, and Mr. Palmer mentioned that the business and the CEOs they confirmed that the economy is strong and fine, but it will take time to see to people also feel this power because it's usually this translation, this transfer from the economy to the businesses and the businesses to the people, it will take a time, so the people also will feel it. About the questions that ask him whether Federal Reserve will think about the lower inflation or negative inflation rates, or lower rates or negative rates, and until the people to feel the lower prices besides instead of the higher inflation that they had, higher rates that they had for about 2 years, Mr. Powell denied that theory and told that theory of this against the Fed theory. And they are not thinking about the holding the rates lower to make the people feeling lower prices. And the economy is not to bring the prices lower, it's economies bring the inflation lower and to control the inflation. And the people will feel better purchasing power instead of feeling the lower rates in lower prices, and it will take a little bit more time, but the people they will think about it and they will feel that. And generally, the Federal Reserve thinks that they are in the right way of lowering the inflation, but at the same time, they're controlling the economy and helping the economy to increase. We have to think about it. We have to take it more seriously that the inflation and the core inflation, core PC price index was around 2.7% and didn't change, remain stable around 2.7%. But still, Fed Powell mentioned that the inflation, excluding the housing prices, is fine and it's acceptable, and we can count on the lower inflation and say that the inflation we are already somehow control the inflation. So the inflation generally, the inflation path generally is fine. What the Federal Reserve is thinking about that. So but at the same time, when Mr. Powell talked too much and mentioned too much about the power of labor market power and U.S. economy power, and at the same time they mentioned that we have to be careful about a little bit more about the inflation. That brings the question in the market whether the Federal Reserve will cut the rates again in December meeting or not. And that was the reaction, market reaction. Now the market is counting around 30% on not counting the rates and holding the current 4.5%, 4.5% in interest rates instead of 4.75% interest rate, instead of cutting by 25 basis point, which was expecting before. And now the market is counting on a rate cut about 70%. So the option of not cutting the rate, the option of holding the current rate till end of the year is the option, while it was not an option at all. Just like when we were talking, when we were thinking, just like think about the months ago, when after previous meeting with the 50 basis point, market was counting on 50 basis points on November meeting, and then maybe 50 or maybe 25 basis points on December meeting. But now the market is counting on probably the market, and now the Federal Reserve cut the rate by 25 basis points, not 50 basis points. And now they are talking about even the holding the rates just like an option instead of cutting the rates. We will have the Fed meeting minutes in 12.5 weeks in the next Wednesday, not the next Wednesday, then the one after that. And we will have the speeches of the Fed speakers in the next days, to the end of the next days, that they will give us more data and updates about what the Federal Reserve is thinking about the economy, what the Fed members are thinking about the inflation and generally the labor market and economy progress, and what they're thinking about the rate cut in 2025 and December meeting. So generally with this is generally we can say that the market outcome from the meeting was less hawkish, less dovish than expected. So the meeting was somehow the hawkish, just like the market reading was about the hawkish reading, not the dovish. Let's see what was the reaction. So this is what market understood from the meeting, but what's the reaction in the market? Let's start with the US dollar index. US dollar index was lowering yesterday before the meeting, because before last night meeting, before yesterday meeting, the market participants were thinking about 25 basis point rate cut, and then signaling of another 25 basis point rate cut in December. So what happened? 25 basis point rate cut happened, but not signaling about this 25 basis point rate cut in the next meeting. But also there was some expectation of not cutting generally the rate in December meeting. That caused the US dollar index to slow down its downtrend. The slowdown is lowering and started gaining, which is expected to continue in the next weeks. So generally, the overall positive reaction after the Federal Reserve meeting, the positive reaction after election, with the decision that they had in the Federal Reserve and with the expectations that we had in the Federal Reserve for the rate cut, which expectation they gave to the market, we can say that the US dollar still can be strong, and we are not counting too much on a lower or weaker US dollar rating. So around 100, 130, 103.50 and 100. This area is above this areas we are expecting to see the US dollar index higher. Generally, the stronger US dollar index is what we are expecting. On the stock market increased rapidly and printed the new records after election, with the positive reaction that we had to the election. But now this emotional reaction, or this emotional time is already it's time out. At the same time, it's over. At the same time, earning reports somehow ended. We have lower, less important earning reports in these days. So we don't have any other catalyst. And Federal Reserve also had a negative shock to the market with the 25 basis point rate cut, but not signaling for another rate cut. So we can say that market is hard to explain, especially we are getting closer to end of the November and then December. So the market is not going to increase in these months. And generally, the people, investors, are thinking about the cash out at the end of the year and reinvest again in January and February. So that's why these days it's a little bit hard to expect to see the lower prices. So the market is holding these current rates or a little bit. So the side movement and downtrend can be more expected than higher prices. On the Bitcoin and the cryptocurrency market, the Bitcoin which was increasing, where is my BTC chart? That's Bitcoin. The Bitcoin which was increasing after the election, as I mentioned after the election video, that the things that right now we have, the condition that right now we have in the market, it's a little bit confusing because Mr. Trump administration, they didn't say nothing about what exactly they are going to do with the crypto market. They just gave some positive signal in regulation things and stuff like that, but they didn't give any clear plan. That's why hard to expect to see the federal market to have more positive reaction while they are not cutting their not the option of possibility of not rate cut in December also can be another negative signal for the Bitcoin. So generally the BTC price also is, I think the uptrend is over around this level with this condition. About the gold, what about the gold? We can say that the higher, the stronger US dollar, which put the gold under pressure at the same time with the positive reaction in the stock market, made the gold demand lower, to bringing the lower the gold demand. But at the same time, we can say that knowing all this condition and this situation, the gold is still in uptrend because the overall geopolitical tension is still high, and we can expect the geopolitical tension to continue still higher. That's why. With the stronger US dollar, may gold be under pressure, but as long as it's trading above 2,600, can be still in uptrend, and lower rates, lower prices can be the correction for now before its next movement. For the oil, generally the positive expectation from the economy and data, that positive data, especially the strong export that we had from the China, generally they support the oil prices. At the same time, the tension in the Middle East still is high. We don't have any clear signal about the lower tensions in the Middle East. So that's why we can expect the oil price still to hold these the levels. So the demand and supply both are in fire. So this is what generally the Federal Reserve decided and market reaction. If you had any other question, please do not hesitate to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.